entire narrative. We have LIC Housing Finance Management joining us on the show right now. We have Tribhuwan Adhikari, who is the MD and CEO of the company, joining us. Very good morning to you, sir. Thank you so much for joining us on ET Now. Firstly, let me talk about your numbers, because it was a good set of numbers coming in for the quarter gone by. Your NIMs saw an improvement of approximately 16 basis points sequentially. But going ahead, if you could help the investors understand what should they actually read when it comes to your NIMs, what sort of levels should one watch out for, and also how the loan yields and cost of funds will shape up going ahead?
Last year, when we had come for the annual conference call, let me call it that, or annual meeting, we had given a guidance of 2.7 to 2.9 for NIMs, and we have been able to maintain that. We have closed at 2.72, I believe. Yes, the borrowing costs have been under pressure, especially in the last quarter of the year. Liquidity position was very tight, especially in the months of March, and RBI did make some interventions. So as a result, our borrowing costs did go up in the third quarter. But overall, for the year also, of course, when compared to the NIMs of the previous year, that is at 3. We were at 3.08. We were quite sure that it not hold, because 3.08 we had got the impact of the full rate hikes which were passed on to the borrowers in the previous 2 years. So we were quite sure that NIMs would come down and net interest margin also would be under pressure. But I think we've done well to maintain it at 2.72. Going forward this year, yes, there have been changes. Since February, there was a rate cut. Again, in the month of April, there was a rate cut. I'm expecting a rate cut in the MPC of June. So with these rate cuts around the corner, there will be, because cost of borrowing has to go down. We have to pass it on to the borrowers. Our experience so far, as for the cost of, lending has to go down. But the cost of borrowings have not been impacted so much. There is, yes, they have gone down partially. I will not say they have not gone down completely. But it's not gone down to the extent of the repo rate cut. So it will be a wait and watch, but I'm quite sure that the NIMs would hold anyway between 2.6 to 2.8 this year also. Of course, attempt will be to take it higher, but this is the guidance I would like to give for the current financial year.
Okay, morning, Mr. Adhikari. This is Snehi also joining in the conversation. If I recollect correctly, last quarter you mentioned about the disbursement slowdown, and that was attributed to Hyderabad and Bangalore due to regulations kicking in over there. Tell us, what's the landscape now, as these regions contribute roughly 30% of your AUM, and would it be fair to assume that roughly 10% AUM growth in FY26 is an assumption we can work with?
Yes, talking about disbursements, yes, Q3 was slightly muted because of these two territories, if I may use the word, Hyderabad and Bangalore. Hyderabad has come back on track fully, and they have done wonderfully well in Q4 of this last fiscal. They have, in fact, achieved whatever goals and targets we had set them, given them to achieve. Bangalore also is coming back on track. The recovery is good. But the pile-up of those unregistered cases due to that e-Khata issue, some small amounts of pain we are experiencing. But I believe in the current financial year, these two regions would be fully poised. They are fully poised to grow and grow at a faster pace than last year. Overall disbursements, if you see, Q4 was good for us. We have done almost more than 19,000 crores of disbursements in the quarter, as against an average of around about 16,500 crores in the past years. So the growth is good. There has been almost a 21% growth a 5% growth in Q3 in disbursements. This year we are very optimistic that on the disbursement front, the sales front, we would continue to do well. As well on the books, as far as the books are concerned, we would definitely show a double-digit growth.
Right. So if you look at the growth in the project loans, although the base is low, but the growth in your project loans seems to be picking up. While the segment has actually higher yields, but I believe that it could also add up to the risk to your books, isn't it? So if you could help us understand your take on this, because earlier you reduced the book and now the growth seems to be kicking in.
Well, the project loan book has shown a very good growth last year. Of course, the base was very low. Year before we had done 3,200 crores. This year we have ended at 4,400 crores, approximately 37% growth in the book. Project, as I said, our legacy is not very good. In the past, we had been very aggressive on that, and we landed up in trouble. Almost 50% of the book was in NPA. So over the past 2 years, we have taken very measured and very thought of steps of trying to grow the book without adding too much of risk to it. Some of the measures which the board has taken is that we would lend only to companies who are rated BBB and above, so that we get good companies into our books, which have a pedigree, which have a reputation. So that is one. So this effort would continue this year. This year, I believe, will be slightly more aggressive in the project loan book, because right now the project loan book constitutes 3% of my total loan book, right? We would definitely want it to go higher. We have set ourselves a target of a disbursement of 10,000 crores in the current fiscal, as against 4,400 which we done last year. So it's going to be more than double of what we've done last year. And with the sort of demand in of housing loans looking good, I believe there is a great opportunity to get into this segment, albeit a little bit cautiously. We cannot go gung-ho, and pick up the right kind of developers and construction companies to lend and finance.
Right. Mr. Adhikari, you also mentioned about increasing your focus on affordable housing. Can you shed some light on how that segment has fared in the quarter gone by, and what is going to be the strategy to increase your penetration here? What kind of NIMs can we expect for this segment as well?
Yeah, coming to affordable housing, yes, we are convinced and absolutely sure that this is going to be the segment of the future. As a company, yes, we are slightly on the back foot because we have never focused on this segment. Last year, or the first year when we started focusing on this segment, and it was late August that we released our first affordable product. We are also very, very sure in our minds that we are not going to go gung-ho into the affordable segment, though reports in the market shows that every other company is venturing into the affordable segment. So we are cautious about it because we know this segment is something, first of all, it is not our forte. We have never been there. So we don't have the experience there. So we've taken measured steps. Last year, post-August, we have done a disbursement of 432 crores in the affordable segment. This year, we are targeting about 2,000 crores in the affordable segment. So we are building up the structure. We are looking at it in a measured way, trying to get into it in a calibrated fashion so that we don't end up with high delinquencies or having to make huge provisions on the affordable book. So, but definitely this is the sector we are very convinced, and there is total conviction in the company that this is the segment to be in.
All right. Also, sir, if you could tell us about your asset quality. If you look, your stage 3 EAD book is coming down now. Your provisions are also low this quarter. So what's your outlook there? Will it only keep growing and improving going ahead?
Well, the asset quality has been constantly improving quarter after quarter, year after year. And if I remember 2 years back, our GNPA was at 4.41%. We've ended this year at 2.46%. So definitely asset quality is improving as many of our legacy loans get sort of resolved. The quality is going to get even better. We are very optimistic that in the coming fiscal, the asset quality is going to be even better than that. Provisioning requirements will definitely come down. And looking at various steps, like, of course, apart from the various legal proceedings and the put feet on the street strategy, ARC sale is also going to be one of our focus areas this year. We started off last year with one ARC sale. Of course, that was a big loan which got us 250 crores and removed almost 520 crores of NPA from our books. So we are very optimistic for the asset quality. Will continue to do well in this current fiscal financial.
Okay, Mr. Adhikari, thanks so much for joining us on the show today and chatting with us. Great speaking to you. But on that note, viewers, time to slip into a very short break on Buy Now, Sell Now. When we come,
if you like this video, then like, share and subscribe to ET Now.